paid this tax on the company account. The corporation tax has been paid. So it's just a waiting game now. They've got to wait all the way till the following April to show it on their self-assessment. But accounting letter could just show that it will be done. It's just a matter of waiting till next year, and then some lenders accept that and some don't. But in terms of when you pay those dividends, it wouldn't matter if you were paying them during the year. So if a company was formed in February and it ran till the following February, whether you do it during that period or you do it after that period, when we do the accounts, it realistically won't make a difference because it's the following self-assessment where it'll be shown as a lump sum. But if your company was formed after April, so let's say it was formed in May, June, July, and you know that it finished this, say this May or June or July is when the company year finished. So then it's all the way till the following April before you could show it in a self-assessment. What you could do if you took it out during the actual year, it could technically go on the self-assessment that went before the company year even finished, because you could declare what you'd taken up to that point. So that would be one way as well. Is there a tax efficient way to pay school fees from a company or a private account? From a limited company, it's the same as the vouchers you can get from other limited companies as well, or from other employers. Like if you worked for a company and they provide you that, it is the same. I think it's like £234 a month is what could be paid from the limited company, and it'd be considered a business expense. If it went any higher than that, it could be done even higher than that, but there'd be a separate tax to pay on your self-assessment, because it's a bit like a car where you're now receiving a benefit from the limited company. So it would have to go onto your wage slip and then declared on a self-assessment. But up to £234 a month you could pay from the limited company, but you would have to make a contract from your limited company directly with the childcare providers, and they have to be the ones that deal with those vouchers and stuff. Does an employee who works for you only and earns a tax efficient salary need to be okay? So no, if the person is only employed by you and they don't receive any other income, they wouldn't have to do a self-assessment, because for your income it's already submitted to HMRC on a monthly basis, just like if they were employed anywhere else. So like even when you might have been employed previously yourself by anyone, you never had to do a self-assessment. So for your employees, there normally isn't a self-assessment to do. The only time there would be is if your employee was also a shareholder in your company. So then they would be receiving dividends, which there would be no way of HMRC doing the calculations on that without submitting a self-assessment. So if you've got an employee who's also a shareholder in your company or elsewhere, they might have rental income, any other income that's not been taxed, then they would have a self-assessment to do. But if it's purely just one employee on your company, they don't work anywhere else, they would have no self-assessment to do. Only you would. What's the best way to invest in a separate business to locoming? It really would more than likely be just the dividends. So when your company year ends and you've got excess amount of profits left in the company after the tax has been paid, your three options are: option one, leave it in the account, and which if you need it in the business, you would leave it in the account, but most of our clients don't. So, option two would be to transfer it into a personal account. That's when it becomes dividends. So you would then have your dividends tax to pay. Or if you loaned it to another limited company, could be your own or somebody else's company, then you wouldn't have the dividends tax to pay because you personally haven't received this income. So then you wouldn't have you wouldn't need to declare that onto your self-assessment. So if I pay with personal for expenses and then transfer from business, so if you pay for stuff using your personal account, and then you reimburse yourself. Yes, it can technically be done, but it's not good practice because one is extra work for you to do, and it makes it quite confusing of what's going on because you're paying for stuff personally. How do we know it's a business expense? Is what HMRC is going to ask. Because if it was, would it have not been just paid directly on the business account? So ideally, you do want to avoid doing that. Plus, it's extra admin work for you because if you pay for it personally, you're going to need to keep the receipt of that item. You're going to then need to print out your personal bank statement to show that you had paid for the item from your personal account. So you're going to have to, highlight that transaction, and then you're going to have to transfer the amount that you paid from your personal account. You'd now transfer that amount from your business account into your personal account to reimburse yourself and still keep the business bank statement to prove you did the reimbursement. So it's a lot of work for no benefit. Whereas if you would have just paid directly on the business card, then you would have just kept only the business bank statement as your proof of that was a business expense. So yeah, it can be done, but it's not recommended. Like at the beginning, maybe as a few one-offs, you might have done that, but really, once you build up money in your business account, way better off just doing it directly from your business account. And then also with our expense sheets, end of the month, much easier when you've just got to log into just your business bank account and just transfer those figures over rather than having to look through your personal account. Things can get missed like that as well. Can I put phone charges as well? Yeah, you can put phone charges, the phone itself. So it's not just the line rental. You can buy a phone outright and still claim the monthly line rental as well. Like, yeah, ideally, you just want to buy the phone directly on the using the business bank card. Emailed receipts are perfectly fine. You could print them out if you wanted to keep them, for your records. Up to 6 years, you are legally meant to keep all of your records in a secure location. So whether that's cloud-based or somewhere secure where you print them out. So if you need to buy any binders or plastic folders or anything like that, you can buy them, put them under stationery, and pay for them directly on the business card. In terms of utility bills, mobile phone contract, and rent, does it have to be under the company name to be expensed? No, the utilities would never be under a company name anyway because all of your utilities would not be a business expense. So 100% they would never be coming out of your business account. You'd only be claiming a small portion of them. Uh, at the moment, the accountants are to get the taxes down. They are like maxing out the office rent rather than the utilities at the moment because utilities are really small. 8 to 10% is all you can claim of the actual bill. Whereas with the office rent, you can claim 100%. So it makes a much bigger difference to the tax bill. So they're not really bothering that much with the utilities at the moment. The mobile phone contract in terms of the actual line rental, let's see, £15 you can claim when it's in your personal name, and let's say if you bought the phone outright, you could claim the cost of the phone outright and then claim the £15 a month. But if you went to the effort of getting the contract as well in the business name, then you would be able to claim the cost of the contract as well. Anything that's in the business name, those contracts are more expensive though, like for like. But yeah, if you did that, even if it was 50, 60, £100 a month, a business contract, you'd be able to claim the full cost of that. Even if it was a contract that included the phone in it, if it's under the business name and the money's going out the business account, you'd be able to claim the full amount. After paying corporation tax, I'm confused about how and when I can transfer most of the remaining money from the business to personal account, providing I still leave some in there to fund the business expenses. So yeah, it's a little bit of a tricky one, but basically, how you'd want to do it is you take all of your expenses at the end of each month. So whatever your genuine like business expenses are, whatever needs to be reimbursed. But if you're on a salary, you're receiving a salary from your company every month. You get like we give like a meal allowance as well, or mileage you'll get from your limited company, the office rent that we mentioned before, mobile phone allowance, whatnot. You get that money, and then if you're able to live within that money, great. If you can do that, and then when you get to the end of the year, once the taxes are being paid, you can take the remaining money that's in your account as a lump sum, and you can transfer it. Whatever you do transfer, that will be classed as dividends, and there would be a tax to pay in your self-assessment. So that figure is normally agreed upon when we do the tax return. So when we get to the end of the year, uh, whether you've taken the money already up front or not, it's going to get calculated at that point, because the figures that we're going to need is your turnover for the year, so to know exactly how much you've made in the year, and what the business bank balance on the last day of the year was. So between those two figures and your expenses, you can work out how much dividends has been taken. So if we say, for example, you did £70,000 in a year, and then expenses would be more than this, but let's just say the expenses were £20,000. So you and I would all expect 50k to still be in that account. So if 50k is in the account, then that means you haven't taken any dividends. All you've taken is your salary and expenses for the year, and everything's still there. So we would, when we do the calculation, we'd let you know, tax bill came to this amount. You've got this amount that you can take, and it looks like you've not taken any, so this is the full amount that you can take. Or on what usually happens is £70,000 turnover, 20k expenses, you're left with 50. Say the tax bill's about £8,000, so then 42 is what you're expecting in the account, but there's 10 in there. So whichever way you look at it, dividends has been taken already up front. Sometimes there's still a bit more that you can take, so we'd let you know, you've taken this amount based on the figures you've given us. You can still take this much more, or there isn't. They've already maxed it out. But then it is just you can transfer it into your account, and then when we do the self-assessment, we'd let you know what the tax for that is. In terms of knowing how much to take, if a person was taking it upfront rather than all as a lump sum at the end of the year, it would be where you'd have to kind of like guesstimate how much is going to be your tax. So the way we always try and tell the clients is, if you leave a third in your business account and you take up to 2/3, which includes your expenses, then you know that's more than enough, because a third is going to be 33% and the tax is going to be nowhere near that, since the actual corporation tax rate is 19%. So it just ensures 100% the tax has never left the account, first of all, and hopefully you'll have something as a lump sum left towards at the end of the year that you could still take in the form of dividends and put it into your savings, rather than just taking it on a monthly basis all the time and kind of keeping your account running quite low, where if you kept on doing that, you'll get to the end of the year and you may not even have the actual tax money there, which would be obviously incorrect. What's the dividends tax rate? Okay, so dividends tax rate is 8.75%. And then the higher dividends tax rate is 33.75%. You definitely don't want to be paying that. But the way the dividends tax is calculated is, when you do your self-assessment, on the self-assessment, you have to put like all the income you've received. So if somebody had like a part-time job, and in that part-time job, I'm just going to use round figures. In the part-time job, they had like £20,000 from the part-time job. Then you've only got 30,000 that you could take in dividends, because it's like £50,270. Up to that amount you can receive in salary and dividends, and you'll still be at the 8.75. Anything above that would then take you to the 33.75. So if you're purely only working for your limited company, not worked anywhere else, then you've got around about 38,000 you can take. Especially if you're on the £12,000, £1,000 a month salary, then you've got 38 you could take in dividends at the 8.75. How do I claim office rent? Okay, yeah. So to claim the office rent, it is literally just working out what the going rate in your area for an office would be, and it's just like the average for an area. From seeing people's expense sheets and making a few calls ourselves, one of the admin girls did ring around all over the country like for about a week. Um, it is like 400 is like kind of your max for London, and then Manchester, Birmingham, like the other bigger cities are like 350, and then the smaller towns 300. So we tend to say 300 as your minimum. So like Bradford or somewhere like that would be like 300, and then Glasgow, Manchester, Cardiff, Birmingham would be 350, and then London would be 400. And the agreement it is on the Telegram group. I think it's March of last year, 2022, but we only post once or twice a month, so it's pretty easy to find. But it is on there. Technically, you would need to fill one out on a yearly basis. Um, so given the example you've gave that self-assessment will be done the following April after a company that was formed in May the previous year, how does that work for someone who is also PAYE above 100k? I mean, I'm not 100% sure what you mean, but like if you're on 100k, you could still do a self-assessment. But if you're on PAYE on that amount, that should get you the mortgage anyway. Like you hopefully wouldn't need additional kind of proof as long as you're still on that job. You can just show those last 3 to 6 months pay slips and use that to get the mortgage rather than the limited company. I'm not quite 100% sure on that one. Can I pay my salary dividends to a different bank account? Example, I have a Barclays and Santander account. If I've been paying into my Barclays usually, but then I can transfer some. Yeah, that's fine. Can go into whichever account you want. Would it be possible to prepay my company office rent ahead of time for next year before the company accounts due this year? And wait, would it be possible to prepay my company office rent ahead of time for I mean, technically, you could do that. I'm not 100% sure of the benefit because then next year it wouldn't be there as an expense because you lumped it all into the first year. Mm, But I mean, we could discuss that, but it technically is possible to do. Should I set myself up as an employer for my pension or the payment review? So it wouldn't be set up as an employer. You do need to get the advice from like a financial planner for this, but the way the accountants say to always do it is to pay it as the employee, not like as the employer, because then you'd have to pay like the government stipulated amount as well. But you do want to set it up where you're paying it directly from your business account. Up to £60,000 a year you can pay, without any taxes and whatnot. Um, but yeah, it's up to you how much you want to pay. But you'd want to set it up where you're paying it directly from your business account, and then it would be considered a business expense. I think it's like especially useful for people who can't find somebody who they could add on to payroll. They could use that as another form. Like it'll bring your taxes down, but it's also putting money away for your future. After paying corporation tax, how much of this tax-free money can I send as dividends to my personal account if I have opted to pay myself dividends on a yearly basis compared to monthly? The first £1,000 is tax-free, and then anything above that would be 8.75. So how to pay directors' dividends from post-tax realized profits. Example, my company year is October to October, but April is the cutoff. So can I take the limit from the previous year? No, it's just whenever the company year ends, that's when the calculation will be done. It's just it's declared on the self-assessment, but the self-assessment period cutoff really hasn't got anything to do with it. It would just be when the company year ends. At that point, you'd be able to work out what uh, the turnover for the company was, what the tax bill is going to be, and then what's left in the account after that point to know what the actual dividends would be, and then it's agreed upon, put onto the account, and then the following April you declare that amount. For loans sent to another business account, does it have to be repaid? At some point, it depends on the terms that you put on. But essentially, you are making an investment that you are looking to get a return on. Uh, Often it doesn't, though. Depending on the kind of investment they've made. But the terms are literally up to you. Are you going to charge interest on this loan? Is it interest free? Is it paid back on a yearly basis? Is it I'm giving it for 10 years and then I'm going to start taking payments back? Yeah, it's pretty open to interpretation of how you can do it, but yeah, you would expect to be getting repaid for an investment. Okay, so when I take money out through dividends, am I leaving a third of my total income before or after expenses? So it would include, so ideally you would want to leave a third, and the two-thirds you took was dividends and your expenses as well. So but it would obviously depend on what the turnover for the month was. So if you like did £6,000 turnover, then up to 4,000 you could take in salary and dividends, salary, expenses and dividends, and then the other two you'd leave in the company account for your business expenses through the year. You might be buying laptop, mobile phone, and any other business expenses you've had, and then the for your taxes as well for the end of the year. But if you look at it like from a strict point of view, realistically, only the tax money has to be in there. So this one-third rule, it's just only what the accountants want for the clients. It's not like a written rule anywhere. Like the only part that really can't leave your account is the actual tax portion. So whenever you look at the taxes, accountants' job is to get the tax down as low as legally possible, but it's never ever going to be zero. It's always somewhere, hopefully, between the 10 and 15% mark. So even if you went to the higher place of 15%, it's never realistically going to be above that figure, since the the tax rate on its own is 19%, and we've got expenses to factor in. So it's going to be below 15% of your turnover, pretty much for sure. So that's like even if you earn like £3,000 in a month, and you obviously need more than the two-thirds, then you could look at well, realistically, out of that £3,000, maximum the tax could be is 15%, which would be £450. Well, the other 2,550 you could then take as expenses and salary and dividends. So you can look at it like month to month like that as well. But if you kind of did that 15% thing every single month, you're pretty much only leaving your tax at the end of the year. But it can be done like that. Do we submit expense sheets each month or end of? Well, ideally at the beginning, it's good to send a couple in, just to make sure they're done correctly, because sometimes the figures are put like in the wrong section. So uh, often you'll see like the salary, the 732, it's on the very top line where it says self-employed income, but that section is actually income, money coming in, not money going out. The salaries are further down the expense sheet. under the expenses section. So that's why you'd rather just kind of rectify that error from the beginning. So ideally, we sent the first one in, but then after that, as long as you're doing them every month, perfectly fine just to do it at the end of the year. And realistically, you would want to do it every month, because otherwise, how would you truly know what your expenses at the end of the month are? Like, how much am I taking for mileage this month? How much am I taking for meal allowance this month? You wouldn't know if you're not doing the expense sheet. So would want to be doing it every month, taking the figures on the last day of each month, and then moving on into the next month. How much tax do I pay for dividends? It depends on how much dividends are taken, and depends on what your other income is as well. Like, what does your self-assessment look like? Uh, if your self-assessment total income and dividends is under 50k, then it's going to be 8.75% of however many dividends you took. So if you took £10,000 in dividends, it's going to be £875. Any difference in paying my big lump sum dividends at the end of the first company year or the start of the second year? Should I wait until? So, it's a good question, because with dividends, it's like let's say, for example, a company was formed on the middle of June of one year. So then the first year will end on the 30th of June, the second year. And then it's the following April after that. So if we put years on it, let's say it was the 15th of June 2022 company was formed, it's going to run till the 30th of June 2023. And then you'll whatever dividends you take, and we agree at that point. So we either you took it through the year or you left it as a lump sum at the end of the year. If you took it through the year, you've got no choice. It's going to be declared in April 2024, the following April. If you've not taken any and you left it as a lump sum, when you get to the end of the year, we'll be able to work out how much you could take and declare on those accounts. So at that point, you've got choice. So you've got a bit more control on the accounts at that point, because we would work it out and we'd say, okay, it works out that you can take 40,000 pounds in dividends. How much would you like to take? Bear in mind, anything over 38, you'll be paying 33.75%. So you could decide, I want to take 38,000, but you also have the choice of it not being declared in those accounts because it hasn't been taken yet. So if you don't declare it in those accounts, then it will automatically get declared in the following year if you took it out after the company year ended. So if you then take it out after the company year ends, anytime from the 1st of July 2023 to the 30th of June 2024, anytime in that period you take it out, it would then be declared in the following company accounts, the ones that end on 30th of June 2024, and they would then be paid for in April 2025 rather than April 2024. So that's probably like the only difference, where it's not exactly you're deferring them, but they are getting paid a lot further down the line, just because you left them in the business, you took them out after the company year ended. So you then had that choice of, do I want to declare them in this year and pay for them next April, or do I want to just take them out after the year ends and they'll get calculated in my next corporation tax the following year, and then there'll be the self-assessment after that where they'd finally get paid. So you have that little bit of control and choice if you keep it as a lump sum in your account. Does it benefit me having a second shareholder to take more dividends? It only benefits the person if they're making large amounts. So you're even taking 38,000 in dividends doesn't mean that's all a person made in a year. More than likely, you're already on either 732 or 1,000 a month with a salary. So and then you took your mileage through the year, you took your meal allowance through the year, you took your office rent. So you're already probably earning 60, 70,000 or more to be able to take even 38k. So to take dividends that's more than 38k, you're probably earning well above £80,000. And then if you needed all of that money in one go in a year, then it's worth having a shareholder on there, because then you've got two allowances at 38,000 at the 8.75%. But if it didn't need to be taken as a lump sum and you could just take 38 every year, then you wouldn't need the shareholder. So it just depends on what the person's situation is. And then what share you give each shareholder, because it doesn't have to be 50-50. The other shareholder could be 10%. And then you got to look at what their situation is. If they're like, if the second shareholder you put on is an employed person that's on, £48,000 a year gross, or above 50, then there'd be no point putting them on anyway, especially at 50%, because whatever you then take, they have to take legally the same amount. So if you took 30,000, they have to then take 30,000, and then they'll end up paying 33.75% on that 30,000. So it also depends on what their situation is as well. If they're unemployed, or they're your second employee, so all they receive is £1,000 a month through your limited company, so they're getting 12k a year, then yeah, they've got 38,000 they could put at 8.75. So it could be done like that as well. If I am making less than 50k a year, is it more worthwhile for me to work as a sole trader rather than LTD? No. The way we work it is anything, because the part of this answer just comes down to whatever the accountancy fee is. So if somebody's charging like £1,000 to £2,000, their answer will be different. For us, 659, which from October 1st is going to 699. Don't forget, guys. For us, it's over 16k. If you're doing over 16k for the expenses to go through the limited company, you'd save more than if you put it down as a self-assessment. But for every firm, that figure will be different. But it's definitely, it's never worthwhile being a sole trader. It's not designed for anyone who's making a profit. Two reasons. One, the tax rate's identical to that of an employee, but without any employee benefits. So literally, what would be the point of doing that? You're treated like an employee, but without any employee benefits. They're taxing you the exact same. So once you go over 50,270 pounds, you're paying 40% tax. Before that's 20% tax, but you're paying NI as well. Limited company doesn't pay any NI, and you've got more legal expenses you can put through a limited company. And then the second thing is the payment on account. So anytime your tax bill is over £1,000, which as a sole trader it for sure will be, because the tax rate is so much higher, you then have to pay next year's taxes up front with the first year. So straight away you can just tell it's not designed for anyone who's making a profit. It's just there for those people who are trying a new business, who are not sure if it will do well or not. You would start off as a sole trader. So I always just give this example of if you like came and your idea was to sell candles from a shop, and that's what you were doing, then we would definitely say do it as a sole trader, because most businesses do fail within the first 2 years, and only 5% of businesses get to the 10-year mark. So a high failure rate in when you just do a new startup. But locum is not a new startup. Like you already know your day rates are really high and your setup costs are really low. Don't need an office space, don't need to pay business rates. So you'll be making a profit. So anytime you're making a profit, you definitely want to have a limited company in place before you start making a profit, which for locums is pretty much the first week. Can you store receipts on the Starling Bank app? I'm not sure. Never tried that. Can I pay for IP course to your business? You can. Anything to do with the IP course, you can pay through your business account, including like I hear the crazy amounts that you have to pay GPs to sign you off and stuff. You can put that through the business account. It is a business expense. Regarding leasing costs, since you can't claim for mileage, can we restart claiming mileage after we finish paying for the car? Yeah, you could, after you've paid the car off. If loaning money from your LTD to another LTD, after what time would you need to return it to your LTD? There wouldn't be a time frame. It's just whatever the agreement is. Obviously, even agreements get broken. Well, if you loaned it, we just need to keep a track of that. So each year, we would need to know, has anything been paid back, and then it would go on the trial balance. But yeah, we would just only need that information. I don't like to carry my business card around due to the amount in there. I keep all my receipts and use my own account. I assume that's okay. I put on it on every. Yeah, so it's the way you're doing it. That's fine. You know to do it like that. It's just more work on your side, but if that's how you feel comfortable, it's fine to do for the type of accounts like what locums have, because ultimately majority of your transactions are money coming in, not really money going out. It's not the same as like a restaurant or an Amazon or an eBay where it's just thousands of transactions, every week. So for the amount that you have, it is fine to do it this way. It's not recommended. um because even if your card got lost, you can pretty much freeze it straight away. But if you feel comfortable doing it that way, then it is fine, as long as you're keeping a very, very strict record of every movement of your money. Then you could do it that way. Is there any benefits of not taking dividends and leave the money in the bank account? Only benefit would be you'd avoid the dividends tax, but the money's kind of at some point would end up getting stuck in there, because you couldn't then take out, say 5 years down the line, 150K as a lump sum without paying a crazy amount of dividends tax. So it all just depends on what your future plans are. We mentioned in a recent telegram that if you were, for example, like recently, a lot of locums have been buying, or buying into opticians and pharmacies. So if your long-term goal is to either and buy-to-lets as well, a lot of locums doing buy-to-lets. So if your goal is to like do some kind of business service, whether it's renting out a property, getting a commercial premises, putting them on rent, or buying into a business, then it would be fine. You'd actually want to build up in the business. Would it make sense you taking £38,000 each year, putting into your personal account, paying the 8.75%, which is like over 3K every year? So if you did that for 5 years, it's £15,000 you paid on your self-assessment to then go and just do a business investment with it. It wouldn't make any sense. You'd rather leave it in the business, save that £15,000 that you pay on your self-assessment, and you just directly invest from the business. You'd have to form a new limited company if it's like you're opening up a pharmacy or opticians or a buy-to-let. There's a structure that you need to be put in place, but that would end up being way cheaper, because instead of paying the 15K, you're just paying either us or another accountancy firm the cost of running that limited company for the year instead. It'd work out much cheaper for you. Because ultimately, once you've got that business in place, you're going to need another limited company anyway. If I add a family member as an employee and pay them a salary, or add them as a shareholder and pay them salary and dividends, can they give me that money? Is this legal? I mean, what they do with the money after they receive it, that really is their business. So it wouldn't really be uh, a question for tax. I mean, somebody wants to work for you and then give you the money. I mean, I personally won't do it myself, but as a locum claiming for 7,000 travel expense miles annually, is it more tax efficient to lease a car instead? No, not if you're claiming that amount, 7,000 as travel expenses, probably more tax efficient to continue doing the miles. Because with lease cars, you've got, depending on the type of car, you're going to have a separate tax to pay through your self-assessment, because it's like the opposite of mileage. When it's mileage, you're using your personal car for business use. Now it'd be the opposite way around. Now you're using your business car for personal use. You have to pay for that privilege. So through your self-assessment, you'd have another tax known as benefit in kind, BIC tax to pay, which can be quite expensive depending on the car, because they base the tax rate on the car when it was brand new. So if you've got a car that's like 6, 7, 8 years old and it's worth £6,000, they're basing the tax on its sticker value of when it was 21, 22, 25k. So it can be quite expensive doing it that way. So with the mileage, you're really making money every year on it, because it's at least double of whatever the mileage is you normally get back. So if you're getting £7,000, there's no way the fuel even costs £3,500. But the other way around is money going out of your pocket. So I've heard from other people that they only get 5, 10. I mean, for meal expenses, how is it possible that we can claim 30 a day? So basically, there is no upper limit to a meal. So this question gets asked quite a lot, but there isn't technically. That it's a private limited company paying an employee an allowance. So there isn't actually an upper limit. You know, the meal could be £1,000 a day. There isn't actually an upper limit, and you got to look at the ratio between the turnover a company does. So it's not like you're like electricians. They often get like £10 a day, but their turnover isn't that much, and whatnot. The type of work that they do, stress levels involved, so all of that kind of plays a factor into what the rate would be. I know some people do more than that, but 30 is what the accountants do at Centra. Can office rent contract be signed? Yeah, it can be, because it literally is just between you and yourself. It's why most people uh, don't seem to bother downloading it. Could be literally signed at any point. Professional fees such as insurance, registration fees, continuation training fees, do they get reimbursed into your personal account? Yeah. So if you paid for these fees before the company was open, anything to do from a professional side, so not like, for example, if you bought a laptop before the company was formed, you could technically sell that laptop to your limited company, but professional fees, they can all be repaid back. So once you've got enough money in your business account, you would just transfer the amount from your business account into your personal account. Ideally, do each transaction separately and reference each one, so you've got a good record of it. And just so, because 6 years later you could forget what they were for, and then remember to add them onto the expense sheet so we can actually put them through as well. And then going forward, right, once the company is formed, then you would want to change the direct debit details if they're on direct debit, and make sure they're paid directly from the business account. Just makes it much easier for you as well, because then you're not having to reimburse the money either. Does NHS bursary grant for continuing training need to be paid into a business account? Well, I think it does need to go into your personal account, because it's they're not paying into your business account anyway. I think it needs to be declared on your self-assessment though when you receive it, because I think it's classed as income. Mm. Since I have to upload parking tickets to claim it back, I don't keep the tickets and I tend to use the personal account. Uh, Yeah, that's fine. If you've got a picture of it, that's fine as well. A lot of people do that, use these apps and stuff and cloud base and upload them all and kind of just save them on a server. If I was to take a full-time job and significantly reduce the amount of locoming I will do, could I keep more money in the business account for next year? I mean, yeah, you could. Like, I think you mean in terms of taking it as dividends. Yeah, you could do that. You should post the chat in the video. So if we're to watch the video again, yeah, I think I have done that. So the chat will follow along on the side. When does the 33.75% dividends tax rate apply? How much do you have to be earning taking in dividends to pay this rate? So it's just whenever the self-assessment's done, which is going to be, let's just do the June example again. So if your company was formed 15th of June 2022, it went until 30th of June 2023. It's going to be then, if you've taken it and you've declared it in the company accounts, it's going to be declared on your self-assessment in April 2024. So when it's declared in your along with your income in April 2024, it's going to be based on whatever you earn between April 2023 and April 2024. So whatever your situation between that period was, even though the company was formed in June of 2022, for that self-assessment, it's only going to be from 6th of April to the 5th of April. So if in that period you were only employed by your limited company, then you've got 38,000, depending on what your salary is, or if you're on 8784, then you've got just over 40,000. That will still be at the 8.75. But say if in that time, like you formed your limited company in June of 2022, but then in April of 2023, before your limited company finished its first year, you went and got an employed job as well. And then you removed yourself from your company salary, but you got an employed job. By the time we get to April 2024, you might have been working for a whole year and you might have received 40k 45k from an employed job. Then you've significantly reduced, because 50k is the total it can be, so you've now down to like 5-10k you can put down. So you might have, when you did the accounts in June of 23, you may have taken 30k in dividends and declared it as well. Then you've got no choice but to put it down on those accounts. So now you've got 45k salary to declare, even though the taxes have been paid for it, still has to go back on the self-assessment and as the gross figure. So it's a way of HMRC trying their best to try and get that 33.75. But most locums, they're not really affected by that. Because I'd say probably like over 90% of the locums, they're just full-time locums, so they can easily take a high amount of dividends at the lower tax rate. And so is it when it's over 50k or when it's over 38? So it is 50k as a total, like your total income between in a self-assessment period has to be 50k or below, for everything, including the dividends. But if you were just in the whole year, if all you did was you're a full-time locum, then it would be 38,000 you'd have in dividends, because you'd be on a salary of maximum 1,000 through your limited company. So then you've got 38k, but it's still 50k overall. Just think of it as 50k, but from everywhere, any income. You could be a partner in other companies that you've invested in. You might be taking some dividends from there. Everything total has to be 50. So you've asked us to send your business bank shown on the 31st of August. However, I've forgotten to transfer some expenses from previous month. Can I transfer the missed expenses now? You can absolutely take them expenses, not a problem whatsoever. The business bank balance still has to be strictly that day. So definitely a lot of people ask about this as well. Don't worry about it though, because I know, either on the last day you're really busy, you don't get a chance to transfer, or more importantly, more than likely, there's going to be thousands of pounds still owed to you from, because you might have literally done a shift on the 25th, 26th, 27th, 28th, 29th, 30th, 31st of August. So more than likely you've not been paid for those shifts. So there's always going to be that discrepancy there that the accountants have to reconcile. But the business bank balance has to be strictly that day. But yeah, absolutely, even after that point, you can still take the expenses for the previous tax year. And it will still automatically go for the previous tax year, because you're still going to put the expenses in the month that they're meant to be going from. So, your office rent, your mileage, it'd still be in the August column, even though you might have transferred it in September or October. Yeah, so you still send whatever the amount was on the 31st. Definitely don't manipulate that figure. It's just got to be strictly whatever's in the account on that day. We are updating the expense sheets as well to add in uh, a separate column where you put, because pretty much every locum always knows how much they're outstanding. So at any point, if you called up a locum and said how much is still owed to you by employer, they all always know. So we're going to add that in as well, so we can get the figure of the dividends down more accurately. Because sometimes we'll work out the dividends and go back to that same example: £70,000 turnover, 20k was the salary and expenses. You expect 50 to be in the account, and then there's actually 30 in the account. So it looks like, £40,000 worth of dividends has been taken. But when you mention that to a client, they'll be like, no, 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 it's not 40. I only took 30,000, but I'm still owed 10,000 from uh, pharmacies or opticians, or uh, they still owe us this amount. So we are going to update the sheets and just have that on there, just so we always know like what's outstanding as well, so we can get that onto the tax return. Could a benefit of deferring dividends and not doing as much locoming in the next tax year mean more money is leaving the account through expenses, so less tax paid overall? Um, Not 100% sure what you mean, but there is that situation as well. Like, so for example, some people, like either for the IP training, or for some kind of like a retraining and whatnot, they have gone and taken employed jobs, but they're still locuming as well. But with the amount of time they've got to locum, they can only earn under 10k a year. And then they were asking, is it still worth to keep the limited company? And when you run the figures, it still is, because if they did that 10k as a sole trader, the tax would be in the thousands, because it would sit on top of their self-assessment, because it'd be declared now on a self-assessment, and it'd sit on top of their gross income from their new full-time job. So people are getting job at 45 or 50, 52,000. So then as a sole trader, you're going to be paying like 3,000-4,000 pounds as a sole trader. Whereas if you did it through the limited company, your natural expenses will be 6,000-7,000 pounds anyway. So you've only got 19% to pay on the other 3-4k. So it still works out to be, yeah, it's like an odd situation where your taxes ended up being almost next to zero, even though you've earned this amount. But it is just because there's a lot less turnover. Naturally, now you wouldn't kind of reduce your turnover if you didn't have an employed job somewhere else just to get a zero tax bill. Like obviously, if you worked £6,000 for a year, your tax bill would be zero, because your natural expenses of mileage, meal allowance, office rent, and salary would be over that amount. But you couldn't really live on 6k in a year. But yeah, if you went and got a full-time job, it's often still beneficial to keep the limited company, because a lot of people think, okay, now I might as well be a sole trader. But when you do the calculation, it's literally a significant saving still by having the limited company. Can I take the money out as a director's loan if I know I can put the money back into the business account before the tax year ends? Yeah, you could do that. It's not recommended to do, but yeah, you could do that. Technically, you'd have like 9 months and a day to do it, even after the year ends, because it's before the tax return's done. But yeah, but ideally, if you could do it within the tax year, that would be the best. When and how do we pay student loan? Is this calculated after self-assessment? It's actually part of the self-assessment, because your dividends tax is what's going to kind of determine how much student loan you pay, because the limited company, that's got no student loan to pay, because the limited company didn't take out a student loan. But But whatever amount you do, so when you do the self-assessment, on the self-assessment, if you took a salary and dividends and it's over the thresholds on plan two, if it's like over 25.5K, anything over that, we will calculate what the student loan is. And you still pay HMRC. So if we came back and said your self-assessment tax bill is like £950, on the calculation, you'll see whatever the amount for the student loan was, but you still just pay that 950. So the student loan portion might be £300 or something on there. You still just pay the HMRC their figure, and then the HMRC will pay SLC on your behalf, like whatever the portion is for them. So it is calculated during your self assessment. If I buy a property through the limited to rent out later on, is there any good way to get the property back into my personal name? I'm not 100% sure on this because it's more of a mortgage broker question, but I do believe there is a few ways of doing it. Because it's probably going to be where you remortgage it into your personal name, though, because when it's done as a buy to let, the interest rate is a little bit higher than residential because they know you're making money on it, so they want to get a piece of that as well. So if you did actually then go and live in it yourself, you definitely would want to get that resolved, whether it's through contract directly with the bank you're with at the moment, or you remortgage it. Um, but you definitely would want to get it back into a residential at a lower interest rate. I met a locum who claimed that his accountant advised him to pay his Lloyd salary via an app which transfers money from personal account into his business account under business. Is that legal? No, it definitely wouldn't be because Lloyd's and Venlock especially, they've made it clear they won't. Now, I am hearing that those things are changing. So, for example, Asda has apparently left Venlock and is on Locator Locum now. So through that, they will pay you into your business account. And a few locums have said that Lloyd's and Morrison's are going to follow as well. So if that happens, then obviously that's fine. But if it's still the case at the moment where Lloyd's won't pay you into your business account, you can't do that. You're literally just jeopardizing your own career because essentially, if you're randomly audited and it's a well-known documented fact, HMRC, that Venlock doesn't pay into a business account, and you're transferring money from your personal account into your business account and putting it as an income, when they look into it and they see where the income came from, the only person committing tax fraud would be yourself. You couldn't turn around and say it's Lloyd's fault. They didn't put the money into that account. So, yeah, definitely wouldn't recommend that. Is 17K expenses for mileage suspicious even though it's legitimate? My opinion is nothing suspicious. Like whatever is genuinely your expense, if that is the expense and you can prove it, nothing suspicious about it. We literally have locums that will earn 45K, but they drive everywhere for it, but they must literally be working at 18, 19 pound an hour because they've done like 17, 18,000 miles and they've earned 42,000 pounds. And then you've got locums that have done 90, 95,000, but they only traveled 7, 8,000 miles. So yeah, I don't think just off the face of it you could say if it was or wasn't. But it should always be 100% genuine. It's definitely not worth kind of like messing around on taxes. Should we be charging our clients our day rate, or is it day rate plus VAT? Locums are not registered for VAT, so they won't be charging any VAT, and it is literally a massive benefit. Wonder how long it'll be before the government takes it away. But for now, anyone in the healthcare profession where you're helping people, you are exempt from paying VAT. So you can go over the 85K threshold and not have to register for VAT, which is massive. Do business loans have to be repaid if I loan myself from one business to another? Yeah, I mean that is the intention at some point to repay it, because the whole point of the loan is that the other company is using this money to make money, and then you'd get paid back, some of this money. Yeah, but obviously, it often doesn't happen either. There might be agreement that after 10 years, I want to have start receiving money back, whether it's with interest or no interest. You get these things put in place, but then before that point, that company might close because they didn't do well. It just depends on the situation. But ideally, you would want to see a return on your investment. If my turnover for this year is 120K plus, can I take higher meal allowance since the meals I'm working for are a lot more? It's still working the same amount of days, so I don't believe they would put a higher amount through. But I mean, it's a generous amount, 30 as it is. Do you have any recommendations for financial advisors? No, not at the moment. The one that we do, she's looking to like slow down her work, like she's not looking to take on more clients. So, not recommending her at the moment, but she was very good. Following on from Kevin's question, if my family member who I employ wishes to give me their salary, and it's sent to their account, which cuts down on the amount of tax. If my family member who I employ wishes to give me their salary or after it's sent to their account, I mean that's it's not really from a tax point of view. It's not gifting the salary. It would just be you've paid them a salary to do some work for you, whether do a little bookkeeping, managing your diary, whatever they do, and then after that, if they decide they want to give you the money, I mean, I can't see the issue. So the ones who are not locums about VAT, yeah, if you're not exempt and you cross the 85K threshold, so you have to do a turnover of more than 85 through your limited company, you have to legally register for VAT at that point, and then at that point you do have to add it on. So all businesses that know they are not VAT exempt, you kind of build it into your price from day one, so that you're not feeling like you're now missing out on 20%. So it's more like up to the point of what you got 85, you were kind of making an extra 20% on everything at that point. And so that once you get to the 85K mark and you're now having to add, you'd kind of want it already in your price, because all of a sudden you couldn't just add 20% on, because you're now just going to look 20% more expensive. So you'd realistically just want it in your price from day one. And then yeah, after 85, you would have to then register, and it doesn't zero every year. Like some people think, oh, I start my new year, my turnover's back down to zero. Do I? You once you VAT register, you VAT register, unless you knew for sure I'm not going to be crossing the 85. It was just a one-off. You could deregister yourself, but you can't just keep registering and deregistering. What if I don't want the business loan to be repaid? Can it be? I mean, no. It couldn't just be gifted to you. Like, if that same person you've loaned it to, what would it be classed as the gift? No, you couldn't really do that. On the expense sheet, how does the home office expenses work? Is there a limit on how much can be claimed and when? So do you mean, if you mean the utilities? It's a portion of all the bills. So all the bills would still go out of your account, and so I think it's like electricity is 8% they claim, and so each one has a different percentage of what they're going to claim. It's not that much anyway, but it's just like every little helps. But office rent is 100%. So at the moment, what they're doing is they're just doing the office rent as the max rate for everyone. So I'm going to kind of put it into a message where we'll stop doing the utilities, or maybe take them off the sheet if for most people it's working out, the taxes are lower without the utilities, and with the office rent at a higher rate, if that's what's going to work out overall. And then it'll just cut down on the kind of the work on your end that you have to do, because some people's utilities are like every quarter, some people pay it this time, and some people's money goes out after the year ends and whatnot. So it might just work out overall. As long as it's working out, the tax is lower, we might be changing that. Do I need to deregister for VAT? I thought we didn't need to declare it now. So that's for non people that are not in the health profession industry. They need to register for VAT. If you're in the health profession industry, you don't need to register. So if you're optician, doctor, dentist, pharmacist, you're not VAT registered. So I mean a business loan to myself, so I can set up a new business to set up a buy to let. But that would be business to business loan. So you would just set up a new limited company, and it wouldn't go to yourself, because if it went into your personal account, it becomes dividends. So it would be just business to business. And at some point, you do expect it to be repaid. In reality, it may not happen. You may not repay it. It depends on what happens in that business. If you put in a buy to let, and you run that business for 10, 15 years, as long as it's that business is making money and the agreement is still in place that you're not asking for the money back yet, then that's what the agreement is. We would just keep putting it on the tax return. This amount is still outstanding. How do we determine how much office rent can be claimed? And if you've never claimed it before, can it be complained for? It can be claimed for previous months, as long as the company a year hasn't ended yet. If it has ended and the taxes haven't been done, it still can be claimed. The rate is London is 400. Other major cities are 350, and then smaller towns are 300. That's like kind of the average that we've worked out. But you can always do your own research for your own area to work out what the average rate for a one person office would be. And then, if as long as you keep a record for that, that might work out to be a higher figure. You might find somewhere where it's like 450 is your average, like for a specific part of London where you live. Keep a record of that, print it out, so you've got it as backup. So if you claim a higher rate, and HMRC ever queries it, you can always show them, look, it's not possible to get something for 400 in my area. Expenses accidentally paid for by my personal accounts instead of business, you would need to keep the actual receipt for that, because you'd have to prove exactly what the cost was. Whereas when you do it on your business, let's say you buy a laptop and it's from Apple or something, the bank statement might just say apple.com, but it'll be sufficient when it's a business expense on a business card. But if you buy that in your personal name on a personal card, even for a diary, for example, you'd still have to keep that receipt and the personal bank statement. You mentioned in the Telegram group that there might be more expensive. Yeah, the accountants are still working on that list. There's a couple. There's not actually a lot at the moment. Normally, we do the list at the end of the year, but they've not sent it me yet though. But as soon as they do, I'll put it on Telegram. Can you claim office furniture, example sofa and bed, if you have rented a flat close to the business purposes, of course? Um, like if you rented out a place, so if you've got your own home and you rent out a place uh, close to where you're going to be working, you could claim the cost of the rent from that place. But furnishings, it wouldn't really be worth putting it through because at some point it's like you're going to have to move from there. You're going to have to sell that stuff. That money is owed to the business. It's going to go back into the business. It wouldn't realistically be worth doing. You're better off just doing that in your personal name and then selling the stuff afterwards. But the rent, you could then put the full rent through. So if you lived in London and you moved to Whitehaven or somewhere specifically for work, you could put the actual rent through for that. Okay, I think it's been over an hour now, so I'll probably just end it here. But let me know, like, if you thought it was good. I'll post this video, and in the comments to this video, if you guys want me to do it, mention it in there, and then we could set out another one up next month if you like. But yeah, thanks to everyone for coming. Appreciate it. Take care. Bye.